Hello, everyone. Welcome back to another episode of King of Commercial Real Estate. Marjorie Roman here, and we have the king in the house. His name is Dolf de Roos. Thank you for coming over.
My pleasure. Good to see you.
And today we're going to be talking about how to buy commercial real estate with no money down. First of all, is that even legal?
Is it legal? Of course it's legal. The thing I love about real estate investing in general and commercial in particular is that there are essentially no rules. The government doesn't stick its nose in. If you agree to something between a buyer and a seller, then there are no rules saying you can't do that. And in this regard, commercial is even more free than residential because, for instance, in California, if a residential tenant doesn't pay the rent, you can't issue an eviction notice straight away or even take any action for 90 days.
Oh my gosh.
Yes,
Wow.
it's kind of very limited as to what you can do there because they have more tenant voters than landlord voters, so that all these laws have been enacted to protect the supposedly poor, sweet, kind, innocent tenant against the rapacious, racketeering, mean-spirited landlord. Anyway, so they have all these rules about residential tenancies, but even in California, there aren't nearly as many rules about commercial real estate. So it's pretty well unfettered. So firstly, of course it's legal. If you can find a way of not having to put money into a commercial deal, and by the way, there are about a dozen ways of doing that, then it's absolutely legal. I love that about real estate.
And you did mention that there's like about a dozen types of ways to do it. What are some of the most common ways that you have seen for purchasing a building without having to come up with all the money yourself?
Well, let's first talk about the perception, because the perception is that when you buy a residential property, banks will typically lend you 80%. Certainly they'll go to 80% before charging PMI or personal mortgage insurance. Whereas when it comes to commercial, banks only lend about 50%, if you're lucky, 60% of the value of a property. So the perception is that it's much more difficult to buy a commercial and that you need a bigger proportion of cash to make the deal come true. And on the surface, that is true. However, when it comes to residential property, the value of a residential property is based on comps. So a 3-bedroom, 2-bathroom home of a certain age and condition in a certain suburb with a certain view is, if it sells for $400,000, then chances are a similar home, similar age, similar condition, similar size, similar number of bedrooms, similar number of bathrooms is going to sell for about $400,000 as well. Whereas with commercial real estate, that is not the case. It's not based on comps. A commercial property sells on the basis of a multiple of its rental income. So if you and I buy a commercial property that has $100,000 of annual income, and we finagle or figure out a way of turning that into $200,000 of income a year, then the value of the building will have doubled. So, Marjorie, if we find a vacant commercial building and we manage to buy it for $1 million,
Oof.
all right, if you want smaller numbers, then that makes you not go woof. Imagine you and I find a vacant commercial building that sells for $100,000.
Right.
But it's vacant, and we put a tenant in there, and suddenly the value's gone up to $200,000. And the bank valuer, and they're very conservative, they agree that with the tenant in place, it's worth $200,000. And we go and apply for a mortgage. They say, well, we're only going to give you 50% of that. Well, 50% of $200,000 is our purchase price. So that is the first example that I'm going to give you as to how we could buy a commercial property without needing any cash. And by the way, you cannot apply this technique to residential property because it's based on comps.
That's right. It wouldn't matter if I had a super wealthy tenant in my residential home, because in the end, that would not affect the mortgage that I would be getting.
Exactly.
What about the lease to buy option? Is that viable also within the commercial realm? Because there is a possibility to do that within residential. Is that also possible for commercial?
It is possible. Usually it doesn't happen as frequently because the reason why sellers offer a lease to option on residential property is when the potential purchaser has bad credit or other reasons why they may not qualify for a mortgage. So they can't get a mortgage from a bank to buy the property, and the lease option is a way of the seller saying, well, I'll give you the ability to borrow. It's a lease option. You'll pay me lease payments or rent it from me, basically, with the right to buy this property in the future at a given price. Maybe their credit's improved in the meantime or other things happen. And so you don't really get commercial landlords or commercial owners incentivized to offer that plan. I'm sure it happens. I wish it happened because I'd like to buy them under a lease option. It means I can own the building now without having committed to buying it yet.
That's right.
So yes, it can happen, but it's just not standard practice.
Not as common as in the case of residential.
Correct.
Now, what about using seller financing? Have you ever seen seller financing for commercial properties then?
Oh my gosh, again, that's one of those things where people say, but is that legal? Yes, it is. In fact, I am such a big fan of seller financing that I tell people that whenever they buy a property, always, and I often say how often, always, always ask the seller whether he'd be willing to leave some money in.
So can you explain us more about how the seller financing would work in the case of a commercial property then?
Okay.
Because you said the seller is leaving some money in. Let's be a little bit more specific on that. How does that actually
Okay.
work?
So, Marjorie, you're selling a commercial building. It's for $1 million.
right.
You've had it on the market for 2 years, and you haven't managed to get a buyer. And I say, well, would you consider an offer? No, I was offered $600,000 and $700,000, and they turned me down. You turned them down, sorry, because you wanted the $1 million. And I come to you and say, listen, Marjorie, I'll pay you your $1 million, but I want you to leave $300,000 in. I can't afford to buy it right now with my own money. But if you're willing to leave $300,000 in, secure it against the property, so you'll have a mortgage over the property. It'll be a second mortgage because the first mortgage I'll get from the bank, and first or second just means ranking. So the bank has the first ranking mortgage, which means if anything happens untoward, they get their money first, but you've still got a mortgage over it. Would you consider that? Now, I don't know whether you would or not, but many sellers, they think, well, I can't sell it. I've had it on the market for 2 years. Everyone's offered me below what this guy's at least offering me what I'm asking, and I'm going to earn interest on the $300 I'm leaving. And it's not as if I'm asking a gift from you. So I'm going to pay you interest on it. Often they'll say yes.
Gotcha. Yeah,
So-
because at that point, they would be getting their price plus a little bit extra from the interest. Then, am I
Right.
right?
Right. So there's no downside. They can boast to all their friends, I got my price, it was worth waiting, and they just don't get it straight away. So always ask if you can get seller financing, even if you don't need the money. Because if you get the money and you don't need it, you can buy another property with that.
That's right. At that point, you would have two properties instead of just trying to secure the one.
Exactly.
And in the case of the seller financing, so for example, in the example that we were talking about, those 300,000, those would be kind of like the initial payment that you would get for getting into a commercial deal. Am I right? Kind of like the down payment at that point.
Well, it would mean that you wouldn't need to come up with a down payment yourself.
Gotcha.
So I always am a proponent of trying to buy real estate, residential or commercial, without using any of your own money. In other words, getting it 100% financed. And many people confuse that. They think I'm saying you need to get a 100% mortgage from the bank. Well, mortgages don't give you 100% unless it's extenuating circumstances. When I say using 100% finance money, I just mean borrow it from somewhere. So residential, the bank will give you the first 80%. See if the seller will leave another 20% in. If they do, you don't need any cash. If they leave 25% in, you're going to put money in the bank.
better.
That's good. If they only leave 15% in, you're still short 5%. Don't try and pay for it out of cash. See what else you've got. If you have an uncle with a houseboat on a lake that he visits twice a year, and the bank's willing to lend him $10,000 on that, then borrow that money to come up with the 5%. Or mortgage an existing home you've got, maybe your own property that you live in. Get a HELOC and pull some money out of that. A 100% financing doesn't mean getting one loan for 100% from one bank. It means getting money from wherever so that you put no cash into the deal, because it means you're leveraged even more, which means your equity buildup will be even faster.
And you just mentioned another technique that we can use for coming up with the funds for getting our deals, which is a HELOC. Not a lot of people are actually thinking on how much value their real estate, their own homes are right now. Have you used HELOCs in the past for purchasing some of your commercial deals?
Oh, I have. Yes, absolutely. Now, a HELOC, by definition, is a home equity line of credit, so it's based on homes. But I have taken out HELOCs on 2 residential investment properties to use as a down payment on a commercial property. Again, it doesn't matter where the money comes from. What matters is that you try and finance as much of it as possible.
That's right. What are some other techniques that you have used in the past for coming up with the funds without having to bring them up yourself from your pocket?
Well, if worst comes to the worst and you've exhausted all the possibilities of the houses you own and the commercial buildings you own, borrowing against them, all the houseboats owned by uncles of you, you've mortgaged them to the hilt. You've talked people into lending you money. You can run an ad in the paper or go online and say, hey, I've come across this great deal. I don't have the ability to take it down myself. I'm short of cash, but I'm willing to bring investors on board. Now, you've got to make sure you conform to all the financial regulations. You can't go soliciting funds from strangers unless they're accredited investors, et cetera, et cetera. But you can go to your circle of friends or acquaintances, join property investors associations, join investor clubs or groups around the country, and join forces with people. And if you let it be known that you've got a great deal, and you wouldn't want to do it if it's not a great deal, if it's returning 2%, then it's not a great deal. But if you find a deal that returns 24%, and by the way, if you've never found one like that, then you haven't looked far and hard and wide enough. You've got to crank up the looking. Stop watching Netflix. Cancel your Hulu subscription. Cancel all those things that rot the brain and start doing things that will ultimately put money in your pocket. Start looking at more deals and you'll come across some that are returning good amounts and you'll get the investors. In fact, if you do one good deal with an investor, they will call you and say, hey, do you have any more deals coming along? I've got some more money, or my friend wants to be in, or my cousin wants to be in.
That's right. And it's amazing how always in real estate, once you find a good deal, you're going to have, it's kind of like it rolls as a snowball, I feel like. You get into the habit of looking for more and more and more. And also people are looking for you to get them more and more and more deals.
That's right. And
that
as you do
networking
good deals,
opportunity.
You have faith in yourself, your belief system that you can find them will go up. And I bought a funeral parlor at a ridiculously high return. And then all these brokers from around the country started calling me and saying, they said things like, hey, are you the guy who buys funeral parlors? And I say, no, there must be a mistake.
Apparently there's another guy that does that then.
No, I said, I bought one, but I didn't buy it because I buy funeral parlors. I bought it because I buy great deals. So if you've got another great deal, then you can call me, not if you've got another funeral parlor.
That's awesome. But then again, it comes down to the networking opportunities that you get when you're investing into real estate.
Exactly.
Any last tips that you can give to our audience that are looking into commercial real estate, but they're like, I'm a little short on money. I don't think I can do it. Any last tips for those people?
Well, I think that with commercial real estate, you've got the ability to buy it without having any money in more ways than you could with residential. I haven't figured out a way of getting around this bottleneck that with residential, I need to come up with 20% of the value. Even if the building is vacant, I still need to come up with 20%. Even if it's tenanted, I need to come up with 20%. In fact, by tenanting an otherwise vacant building, I don't increase its value one iota. It's kind of crazy. There's nothing I can do to change the value of a residential property other than doing work on it, renovating it. But it is worth what it's worth, tenanted or vacant. What I love about commercial is the value of a commercial is a multiple of its income. If we can figure out a way of doubling the income, we've doubled the value. And if we double the value and get a 50% mortgage, there's our purchase price. This is literally how I've made most of my money in commercial real estate, by buying vacant or semi-vacant properties. And before committing to buy it, I figure out a way of getting a tenant. It's a formula for unlimited success. And it's one that I think the more people think about it, the more they'll realize that, hey, maybe I should do this too.
That's right. Thank you so much for encouraging us to go for those commercial deals that we are waiting on investing on. Thank you so much. And to our audience, go out there. You do have the resources to purchase those deals. We're going to see you on the next episode. Bye-bye.